Hey, are you waiting for the real estate market to cool off before you buy a new house or buy another house? I've heard that a lot this last year, and I wanted to share with you some information that I've gleaned from the National Association of Realtors, as well as some information from economists here in the state of Utah. So there's some things that I want you to consider if you are just waiting for things to cool off. There's four main things. The first thing is specific to Utah. It's our incredible population growth. Utah County alone is projected to double in size. That means we're right now at 500,000 people. We are projected to double in size to 1 million people in Utah County alone over the next 20, 25 years. So the demand is strong. It's not changing, and we already have a very low inventory. Interest rates, the interest rates nationally, now keep in mind the feds set these rates, interest rates are projected to increase probably 2 times in 2022. So as you know, as interest rates increase, your buying power decreases. So if interest rates are at 3.5% right now, and they go up even an eighth of a point or more than that, you're not going to be able to buy as much house. Keep that in mind. The last two items to keep in mind would be an appreciation rate. We have seen in Utah, according to James Woods, he works with the Kem Gardner Policy Institute. He's been studying housing economics since the 1970s. He said on average, Utah homes have appreciated on average 9% each of the last 5 years. At that rate, home prices will double in the next 10 years. That's not sustainable. The other factor that you need to consider, not just interest rates that will impact your buying power, but inflation. Right now, the reported rate of inflation is approximately 6.8%. The realized inflation might be as high as maybe 15%, but next year it's projected to drop, which is a good thing, but it will still be higher than the normal 2% inflation. So it's projected that we will see a 4%, on average, a 4% inflation next year. That's just in the economy. So you've got decreased buying power with interest rates, decreased buying power with inflation, and raising appreciation rates. So we're expected to see, on average in the United States, on average about a 5.7% appreciation next year. I believe in the state of Utah, again, that will be higher, as James Woods has indicated, based on the last 5 year trends. So think about what is your 5 year plan? If your 5 year plan is to stay in Utah, I would encourage you to just get into the market. You're probably not going to get your dream home, but that's okay. Just get into the market so you can capture that appreciation. Renting, you don't have control over your rents. Your landlord controls your rents. By locking in a mortgage, you can count on what your payment will be for the foreseeable future for as long as you live in that home with that mortgage. But most importantly, the best hedge against inflation is to put your money in an appreciable asset. In the state of Utah, we are one of 4 states, only 4 states in the entire country that have seen that have more jobs than we had in March of 2020 before the pandemic. We have 3.8% more jobs than we had in March of 2020. And again, we are one of 4 states. So Utah, Idaho, let's see, I think it's Texas is one of those other states. We will continue to be a magnet. So yeah, I mean, if you look at the long-term housing trends, pricing trends, long-term, if you compare what our appreciation is today compared to the long-term pricing trends, are we overpriced? Yeah, probably based on that one number. But when you factor in demand, economics, appreciation, all of those other factors, that isn't going to change. So is it really overvalued? I don't think so. So why not capture some of that wealth for your own long-term benefit? Hope this helps, and we'll see how next year plays out.